you would like to be bankrupt and in a world of pain, don't watch this video. Go check out something else. If you're starting a construction company and you want to manage your finances to make sure you're going to be rich and you're not running into really hard times, watch this video to the end. I'm going to be sharing you tons of golden nuggets as far as how to manage your finances, how to keep track of your banking, everything to do with the money side of your business. This is probably something new to you, financial business management. There's a lot that goes into it. I'm going to be distilling 20 years of what I've learned and how I manage and run companies, and I'm going to be giving that to you today. First one that we're going to be talking about is the bookkeeping. So actually keeping your books, keeping your financial transactions in order. The one that I use, I'd say a lot of the other contractors out there are going to be using is QuickBooks. QuickBooks is sort of the gold standard. It's pretty much everybody uses it. If you're using something like Sage or Zero, I'm sure that they do something similar as far as how the financials get managed and tracked and everything. There's also Wave Accounting, which is a free option. If you really want to keep your overhead low, you can go get Wave. But if you've done your due diligence with the other videos in this series that I've mentioned, and you've got a little bit of capital saved up for, covering your overhead for the first 3 to 6 months, then you're going to want to go get QuickBooks. And when you start out, there's the question, should you be doing your own bookkeeping? Should you be learning bookkeeping, accounting? What's the difference? Should I, hire a bookkeeper? What's the deal here? So what I suggest is for the first maybe 3 to 6 months, if you want to do your own bookkeeping, you can handle that. There's probably not a lot of transactions anyways, because you're just getting started. And it kind of gives you a little bit of insight and depth of like what actually goes through the books. You have a better understanding on a different level when you've actually done some bookkeeping and kind of taught yourself that. That being said, if you're starting a business, you've got a bunch of money that you're investing, you can cover overhead expenses for a bookkeeper for 3 to 6 months without income, then go ahead and hire a bookkeeper, have them tell you what you need to do as far as like putting in receipts and connecting bank accounts. They'll take care of it. This is something that you should not be doing as a business owner. You shouldn't be doing your own bookkeeping. The one exception is maybe when you're starting out, just keep your overhead low until you get projects running. As soon as it becomes a challenge and you're not doing your bookkeeping regularly, you need to hire a bookkeeper right away. Don't let your bookkeeping slide for, 1, 2, 3 months, 6 months. Some guys, don't even do bookkeeping for a year and then they give it to their accountant and it's like they've got to create a whole set of books and do everything from scratch, and it's going to cost you a ton more money to get an accountant to fix your books and figure out everything for your business on the financial side than, just having a proper bookkeeper to start with. So one of the things with bookkeeping that you should be keeping track of is the first thing after getting, QuickBooks or your accounting program software, bookkeeping software, is you want to, you'll go through the initial setup, but you want to be connecting all your bank accounts, your credit cards. I'm going to be sharing with you later, like which bank accounts to set up and how to allocate funds. And it's a whole new world for you if you're just starting out and this is all new to you. So connect your bank accounts, connect your credit cards. This way, all those transactions, everything that's happening, is going to pull in automatically. All of these accounting softwares, they have some sort of an app generally where you can take a picture of a receipt. It's going to upload it to the computer, the cloud, whatever, and you can keep track of things there. So if you're ever out purchasing things, Home Depot, going out for lunch, McDonald's, whatever, take a picture of the receipt, keep the proper receipts, keep a digital copy. Invoicing. So invoicing is another thing that is going to be new to you, and the cadence of how often you invoice. For most people, it's like, we start a job and then we finish a job and, we invoice kind of when we get around to it or is when I need money. So it's not the right way to do it. You want to be proactive. You should have some sort of a payment schedule. I'm going to be talking about like a home builder or remodeler. If you're a trades business or another type of construction business, you just have to change pretty much the time frames that this happens. But essentially, you should never be doing a project out of pocket. You should always have money in the bank from a client. So before the project gets started, before you put a bunch of time and energy into scheduling or purchasing materials, receive a deposit from the client. Get a deposit, 10, 20, 30, 50%, depending on the size of the project, how long it's going to take, all that kind of stuff. You should never be out of pocket for the money that you're spending on a client's project. It's a client's project, it's their house, it's their property, it's their business, whatever you're doing, they should be paying for it. You should not be on the hook. You should not be paying for their project that they're doing, right? It's just common, not uncommon maybe, but common business practice in construction. If you're working for large commercial builders, a little bit different ball game, and they're going to have their own setup, and you're probably not going to be able to necessarily get a deposit. But there's ways where you can maybe get paid a lot sooner sooner than what is typically normal with their policies. Not going to get into that. You're probably on the residential side when you're starting out. And so you get the deposit. When you start on site, you're always taking money from the deposit. If you want to set the deposit aside and kind of float jobs yourself, that's fine. But you should always, again, have money in the bank for the project. As soon as you reach a certain milestone within 1 to 2 weeks, you should be invoicing. I would say 2 weeks is the longest time you want to go with invoicing client. There's a few reasons for this. One, cash flow, very important. You should always have good cash flow coming into your business, as well as it's a lot easier for clients to pay a lot of small bills and invoices than to pay a big one. So if you are invoicing every week, every 2 weeks, maybe you're spending, I don't know, $2,000 or $5,000 or $10,000 a week or every 2 weeks. It's a lot easier than them getting a bill for $100,000 or $200,000 when, like, let's say you've done your site work, you've done your everything up to framing, you've got that foundation and frame in place now, and you're invoicing them for like 150 grand or 200 grand or whatever it may be. That's a lot harder for them to deal with. Even if they've got financing from the bank and their stages and everything like that, much better to invoice them regularly, and it just keeps everything flowing a lot better. So invoice often and in smaller increments, and it'll do wonders for your business. Always have money in the bank. Never overextend yourself, because if you pull in too many jobs, it's a very key point to think about as you scale your business. Is right now you've got 1 or 2 jobs, maybe 3 jobs. Like, if all of a sudden your marketing starts kicking in, you get referrals, it gets busy season, now you got 6 or 10 jobs on the go. If you have to float and pay out money to start all these different jobs, you're going to run out of money very quick, and it's an easy way to reach the bottom and get yourself either in a lot of debt trouble or have a lot of cash flow issues and miss payroll, miss paying trades, miss paying suppliers, and things snowball, spirals down from there. So very important point. I just wanted you to understand that, because I didn't have anybody telling me this when I started my business. I maybe should have reached out to a mentor or gotten some better help with this, but this is a lot of stuff I had to learn the hard way, and knowing this now is just going to set you so much farther ahead and going to collapse, your time for success to, maybe 1 or 2 or 5 years instead of, 10 or 20, like it takes a lot of contractors. So making sense? Still with me here? All right. So last few things on bookkeeping. Still on point number one. We got a bunch coming up. This is the biggest one though, because this is where everything starts and stems from. It's the foundation. Invoicing and then expenses. So expenses, you want to be categorizing your expenses properly so that you can run reports later. I'm not going to get into job costing because it's a little bit more advanced and it takes up some understanding. It's not, once you know how, it's not super difficult, but it does take a lot of work. So you're going to need a bookkeeper and you're going to need a system in place. But ideally, at the very minimum, you can track expenses to a project. You may not be tracking expenses to like framing, plumbing, electrical, so like all the different, items of a project, but at the very least, set it up in a way in QuickBooks. There's something called projects, QuickBooks projects. You can create projects, get in the habit when you get a new client, set up a project, expenses, get tagged, get categorized as that project. And that way at the end, you can see, hey, I estimated 150,000 for this project. We spent 140,000 plus my overhead. So I didn't make any money. That's a very good thing to know ahead of time. It's not a very good thing, but it's a good thing to know if that's happening on your first project or your second project, because then you can go back to your estimating, hey, I need to raise my prices. Maybe that's why I got that job so easy and they were really excited to work with me. I was like underpriced by a lot. So really good feedback loop, and it'll keep you out of trouble in the long run. Again, making sense here. If you have questions, if I'm losing you somewhere, drop a comment below. I'd love to hear if you're just starting out, what accounting software you're using. Let me know what accounting software you're using, and any questions, any problems, let me know. I'll be happy to comment or explain it, maybe make another video just for you. So number two. All right. So we've got a bunch coming up here. Number two is banking. Last one was big and all encompassing. Just as a side point to the first one, as far as learning bookkeeping, I'm not going to go through a tutorial here because there's lots of bookkeeping and QuickBooks has their own support. Whenever you have a software, rely on the software support for guidance and help. They will have training videos, they'll have whatever. So I'm not going to get into that. I'm talking about the overall picture of you managing a business and being successful. Number two, banking. What kind of bank accounts should you do? Where should you bank? Should you get a loan? Should you get a credit card? When I started, I got a line of credit and I used all of it within a short period of time because, hey, life was good. I was making lots of money and I thought, whatever, I'm going to buy the new trailer, the new truck, the new tools. I'm going to have a good time, making money, working hard like crazy, exciting, until it wasn't. And I ended up having a bunch of debt and having to work my ass off in order to facilitate this debt that I had accumulated. So not a good thing. As far as banking goes, I'm going to explain a very simple concept. There's a book by Mike McCallowitz. It's called Profit First. So don't jump off this video. Check it out later. Just make a mental note. Profit First. That's all you got to search. I'm going to explain that to you in about 5 minutes here. So what the Profit First model is, as far as like banking, is that you are going to have an income account. So all the money from your business goes into this one account. Whether you get paid for any, whatever it is, right? Any income, it goes into that account. That's your income account. From there, it's going to accumulate and it's going to pool. And every 2 weeks, could be every month, could be every week, depending on how you want to allocate it. But you never take money out of that account unless it's getting spread to all your other accounts. So from that one account, you got it up top here, that's going to then be allocated to your other accounts. It's going to be 4 other accounts that you're going to need. You could have more, but starting out, you can even just have 3, really. Very important one, taxes. Almost every new business owner is shocked. I had to pay tax at the end of the year, and I was not putting money aside for a tax because if you've been an employee, it's taken off your paycheck. You don't have to worry about it too much. Maybe, you get $1,000 or $2,000 or $5,000 at the end of the year, or you got to give it back, depending on what kind of income you have. But for this business, it could be 20, 40, 50, $100,000 of taxes that you need at the end of the year. Depending on your revenue, it's probably going to be more like 10 to 30, but it could be more, it could be less. The thing is, unless you've done the calculations and you know what your revenue is going to be, you probably don't know what or how much you're going to have to pay taxes. That's why you allocate. So just for simplicity's sake, you got $100,000 that's coming to the business this month. That is in your income account. Now for taxes, you're going to allocate, I would say probably 10, 15%. Again, for your state, for your country, wherever you are, for your income level, it's going to differ. But 10% is usually a good medium. That means every dollar you get, 10 cents of that is going to taxes because you know you're going to have to pay that at the end of the year. It could even be more. You could need to do 15%. If you want to be safe and maybe have some extra money at the end of the year that you don't need to pay for taxes that you can keep for yourself, do 15%. Anyways, that goes into your tax account. Get set aside. Typically have this at a different bank or have that bank account not show up in your online bank feeds so that you're not tempted to use money from taxes for business operations. Because if that's happening, you're in a bad place. Something has gone horribly wrong in your company and you need to adjust very fast. So first one, taxes. Second one, what's the second one? That is your operating expenses. So profit first, your profit account's coming up. That's probably the first one you should do. So if you want to do the real profit first, you'll put in your profit account first, but essentially it gets allocated to all of them at the same time. Your profitability at the beginning is probably about 5%. Could swing either way. You could start at 2%. That is on top of what you pay yourself. So I'm kind of jumping ahead here. I'm going to get back to operating expenses. So probably about, I don't know, 60, 70, could even be 80%. It shouldn't be that high, especially because you're probably going to still be operating in your business. So you're going to be doing the project management and possibly still on site as well and on the tools, if depending on where you're at. So your operating expenses, again, you'll have to figure out that allocation, but it could be maybe 50, 60, 70% of the money in your business is going to go to operating expenses. This is materials, tools, equipment, any kind of operations that you have, employees, paying employees. So anything that's used as overhead or used to pay for project is paid out of your operating expenses, and that's going to be anywhere from 50 to 70% probably, generally speaking. From there, you're also going to have your profit count. So profit count, again, like I said, 2 to 5%, maybe somewhere in there. Start small, you can always, ratchet it up. Start at 5% if you're feeling ambitious. And the last one that I'm going to mention is your owner's draw. So this is how you pay yourself. You can do an owner's draw or you can give yourself a paycheck. Doesn't really matter. This is money to pay the shareholders, which is aka yourself. Even if you're a sole proprietor, consider yourself a shareholder, consider yourself a business owner. Your business bank accounts should never see any kind of personal expenses ever. Never, ever, ever. Have separate accounts for the different parts of your business and have separate business accounts for your business. Your personal is over here, your business is over here. You've got all your different accounts and stuff. You've probably got a credit card for your business as well. You've got a personal credit card. Total separation. I don't care if you are a sole proprietor, self-employed, whatever you want to call yourself, incorporated, whatever type, S Corp, C Corp, whatever it is, keep it separated, operate like that, and you'll be well on your way to financial success and good times. So that's all I'm going to say about banking. Hopefully that's clear to you. Moving on. Number 3, really quick here, cash flow. So we want that cash to flow. And I alluded to that earlier with the deposit and the payment structure. Cash flow is the lifeblood of your company. So you want to have deposits. You want to make sure you're drawing at the right time. You're invoicing often. If people are not paying you, you need to figure that out yesterday. People not paying you is like someone shooting you with a bullet. I don't know. It's like you're hemorrhaging money because first of all, you're not bringing in money, but you're losing because you are unable to pay properly. You're not collecting interest on that money. And the longer a payment waits, the less someone feels obligated to pay you. It's just a natural psychology thing. If someone's like a week late on their payment and they do it once, they're more likely to do it again. So you need to be really clamped down on that. And because you're a new business owner, you cannot let this get out of hand. It's very common to feel like you want to be nice or amicable because you don't want your client to write a bad review you or get upset or whatever. If they're not paying you, that's their problem. It should not be your problem. They need to figure out if they got to sell some stocks, they got to sell a car, if they got to scrounge up some family money, whatever it is, they agreed to do this project and you've invoiced them. You've done your part of the deal. Now it's their turn to do part of the deal. If it's a general contractor, same thing. You've done your part. They should do their part. And you should be very clear with expectations up front with the client. This is, I expect to be paid 3 days from invoicing or 5 days from invoicing. If it's with a GC or large developer, ask them what their terms are: 60 days, 30 days, 90 days, whatever it is, and ask them, like, I'm going to invoice you often because that's a very long time to be waiting for money. So I want to invoice very early. Or can I invoice you like a site mobilization, the day we show up and we start working and I got labor there and my materials? Can I invoice you so that I know that I'm getting paid, within 1 month or 2 months, so that we're not just floating this entire project? So I can't operate at that point or something like that. Anyways, have that discussion early on and make sure that you are, collecting funds. Some quick tips for collecting money. Definitely you want to be on the ball. Squeaky wheel gets the grease. So you don't want to be super annoying about it, but at the same time, they owe you money. It's their problem. They should be dealing with it. So don't feel like scared or worried about following up with them, asking them often, saying like, hey, what can we do? Maybe you can just pay like 25% now and you can do like, we can work this out where you just pay 25% every week, for the next 4 weeks or whatever to get this caught up. So maybe smaller payments is the option. Maybe they need to pay by credit card, which is going to cost you a few percentages because you got your fees or whatever. But if that's the only way to get paid from them, then it's the right thing to do, because again, the longer that stagnates, if someone goes, a couple weeks, they're like, oh yeah, no, I'm going to pay you. Their intent is to pay you. After a month, 2 months, 3 months, if they're overdue on their payment, it's just like their obligation, even though it's as high as ever, to them, it's going to feel like less and less, because it's going to be forgotten about, and the value of your service diminishes over time because they're going to value the service you did less and less as time goes on. Just a human thing, just how it is. So making sense. Keep a good eye on your cash flow. Going into number 4, this is the iceberg that can sink your Titanic, and that is debt. I had some very hard times with this. Ended up closing a company because of just the big debt burden that I had. I was mismanaging my finances. It was a wreck. I would not wish that upon anybody. It was a horrible time in my life and it sucked a lot. And it can happen. I see it happen a lot of time. I help clients sometimes when they get started and they've kind of built this up because they have not managed their finances correctly. And it's not that they don't want to, it's just a lack of understanding. It was the same for me. I didn't understand this allocations. I didn't understand how to, be watching my numbers. I didn't understand pricing and estimating and having that feedback loop. So there's a lot that goes into it, and understanding your overhead. I'm going to be getting into reports in a second of like, which metrics you need to track and which reports you should look at, and how to kind of give yourself a roadmap for success financially. But as far as debt goes, you should be able to operate and grow your business without debt. If that means you got to be lean, if that means you got to put, not the brakes, but if you got to slow down your progress a little bit, that is worth it. Sometimes it's kind of the turtle in the hare where it's like you want to go really fast, and so you take on debt to buy that next truck or tools, or finance another crew, or take advantage of like a large project that's coming up. So you take on a bunch of debt to finance materials because you're going to get that payday at the end of the project, and then you realize that the project you went a little bit bust, you went over time, you paid more for materials, whatever, but you still have this debt load to pay off that you weren't profitable on that project. So it can come back to bite you in the ass really quick, and you want to be very, very careful with debt. For me, I'm a contracting company and we were doing well. It wasn't that I had like tons of debt going into it for my contracting company. It was pretty solid and lean, and we were doing really well. But my eyes, being a young entrepreneur, I wanted to try new things and make the good money like we all do. So I started getting real estate investing, and lo and behold, I was a really great contractor, not so much a good real estate investor because it was new to me. Even though I'd had some rental properties at the time, and had done some investing, but like not flipping houses like we were starting to do. So again, larger ball game, larger numbers, dealing with other partners, other people, team environment, and things went south on a project or two. Lost a ton of money. Ended up financing those real estate investments, and it's just like it was like a house of cards where one business affected the other business, and it was a really bad time. So that's why I keep kind of stressing this is you do not need to go into debt to run a successful business, to start a successful business. Contracting in general, unless you're starting a commercial company, but on the residential side, you really need a truck and some tools. Like there's not very capital intensive. You can finance your growth through estimating jobs properly, having a good marketing machine, and kind of taking care of everything else that I've mentioned in the sequence. So, and by the sequence, I mean like this is a series of videos on how to start a construction company, how to start the right way. I've gone over everything from planning, branding, marketing, sales, client, project management, everything. So go check out the other videos after this one, how to operate and start your company. You're going to be way, way ahead. Take the 20, 30 minutes to watch each video, and you're going to be years ahead of most guys starting out. So, number 4, be careful with that. Number 5. So, 5 is reports. You are now a business owner, you're a shareholder. You need to be watching your financial reports and seeing what's going on with your business. This is where a lot of guys run into trouble because, yeah, I've got bookkeeping. Yeah, I feel like I'm making money. I've got some in the bank, or, oh, taxes are due. And now I'm like, I don't have any money or whatever, right? Get your reports in place, check your numbers. A good bookkeeper should be showing you this, or an accountant, like on a monthly basis, so that it's kind of like right in your face and you have to look at it. But you're going to have your profit and loss. It's going to go up every month and down. So profit and loss is a good statement to check out, but you want to be looking at the trailing 12 months. And because you're starting out, you're not going to have that track record, but look at maybe the past quarter and like add it all together. And then when you get to the next quarter, you can like, how was the first quarter compared to the second quarter? When you're looking month to month, it's going to go up and down a lot. But the big things you're going to have is all your income at the top, so all your sales. Then you're going to have cost of goods sold, which is like materials and labor. Cost of goods sold of what costs actually go into a project. And then kind of underneath that, you're going to have your operating expenses, overhead expenses, and this is everything like insurance, office space, cell phone, those things that aren't really tied to a specific project, but they're part of operating your business and running the back end and having a business with overhead. So keep those overhead expenses low and just check that you're being profitable every month. And just because you have a large profit on the bottom, remember you're going to have to pay taxes later, and there may be unexpected expenses that come up. Maybe a job will go south. So you want to keep some cash flow, some cash locked up in the bank, have access to cash if things go wrong. You should have at least, I would like to say 6 months, at least 3 months, you'll probably be okay. But 6 months of like your personal income. So if you need like 4,000, 5,000 per month to, afford your house or your apartment or, your personal expenses, you should have that saved up so that your personal life is not being tied into the business. And just as an overall, like this is a really important tip, like point to take home here is live within your means. You probably heard it a bunch, but if you can live within your means, don't go on that big vacation. Don't buy that brand new truck. Don't buy that brand new house. Even if you're doing good, if you can delay that gratification a little bit and put that money into investments outside of your company, that is where you build wealth. That is how you can retire in 10 years or 15 years. All right. If you're smart now and you're already setting up your business in this way now, and you're watching your finances now, and you're getting in touch with the right people and taking, like, the purpose of the business is so that you can pull money out of it as profit and put it into long-term investments that continue to grow on the side, so that one day you're going to wake up and you're going to realize you're making more money from your investments than your business potentially. So that is where you want to get to. And that way, if anything does happen with the business can be risky. 1 in 10 businesses don't make it 10 years. I think it is something like that. So odds are that your business is going to fail. Sorry to be hard up on you. I hope that it doesn't. And I believe that it won't. If you've done things properly, you already watched this video, so you're miles ahead. But anything happens to the business, you've got this other money pool of investments on the side that you're going to be taken care of, and you can start another business after or whatever. Again, not planning for that, but it does happen, and it happens much, much too often, which is what I'm trying to change, which is why I'm making this video for you right now. So listen up, and I'm going to move on to the next topic because I think you got that. But reports, so profit and loss, and then you've got your balance sheet, which again is just like an overall balance of like where everything's at. Profit and loss is the one you're going to be looking at. Other reports you want to be looking at, not always on the financial, but like leads coming in, as well as reporting per job. So it's going to be very important, especially when you're starting out, because these are your first couple of jobs. So your pricing is probably going to be a little bit off. Your production is going to be a little bit off, and you need to know which jobs am I profitable on? Why did I go over on that job? If you don't have the tracking, you should at least, because you're very involved with the business, know, like, was it the framing that we underestimated? Was it the plumbing? Was it, did my contractor go over on this? Or, did it just take a lot longer and I wasted a bunch of money on that? So always be feeding back into your estimating and improving that. So that is how you run a well-oiled, financially sound business. I'll see you on the next series.